Now, if the leverage is going to cost you, let's call it 8% interest, and the note's paying 18% interest, you're making 10% on the levered money. Some of the benefits of the notes business, and I'm going to open these all up so you can see them all in one place. You're going to get safety, and you're typically going to get higher yields. Now, we know with elevated interest rates right now, you can put money into a money market account at a bank, you can get a CD, and you're getting rewards between 1.5% and 4.5%, which isn't shabby for an account that's protected up to $250,000 per account, and you're getting paid for the money just sitting there. But I'm going to show you guys notes that are paying 10 and 11 and 12 and 14 and 15 and 16%, which means when you take that same money that's sitting in a self-directed IRA or a 401k or a bank mutual fund or a CD and stick it into a note, you're generating 2, 3, 4 times the amount of interest in something that, in my opinion, is even safer. It's secured against real property. If they stop paying, you get the property. It's insured against loss. So if there's a storm, a hurricane or something, the note holder, i.e. you, is going to get paid before anybody else. That's what the insurance does. Also, and this is another nuance in the marketplace that a lot of people don't realize, mortgage notes are very liquid. They are much more liquid than the house itself. I would rather have $100 million worth of mortgage notes than I would $100 million worth of real estate. Because real estate, I own it. I have to pay the taxes, I have to pay the insurance, I have to manage the tenants and the toilets, I have to do all of the physical work to get it to produce income. As the note holder, I simply have to go to the person that signed on the dotted line and collect my monthly payments. Now, if at any time I want to sell that stream of income, I simply put it on an exchange, sell it to another investor, I'm out. I don't have to sell the property. I don't have to deal with real estate agents and getting it prepared for sale. I got none of that responsibility. So the liquidity of a mortgage note, in my opinion, is far superior than owning the real estate itself. Now, if we wanted to do a own the note versus own the real estate side-by-side comparison, what somebody's going to say, but Lee, if you don't own the real estate, you don't get the appreciation and you don't get the depreciation, which I agree with. But the reason you don't get those things is because you are not on the hook for managing that property. So for those of you that are looking for a simpler return on investment, an easier way to get return on your invested dollar, notes win every time. Now, like you guys, I go to a lot of real estate investment seminars, and in my early years, my first real estate investment seminar was back in 1996. That's how I got into the real estate investment business. And I remember the guru of that organization, his big spiel was, if you simply buy a house a year, put a 30-year mortgage on it, and simply collect rents and make that payment, in 30 years, you have a house that's owned free and clear. And in 31 years, you've got 2, and in 33, you got 3. And I thought, okay, so at the end of 60 years, I've got 30 homes that are paid for free and clear. That's fantastic. There's just one problem. I'm now 95 years of age, and I'm still managing tenants and toilets. I don't want to do that. And so when I got into the debt business, and the debt business is where instead of buying the real estate, I'm now lending money to the people who are buying real estate, and I'm just simply collecting checks. That's it. It's a much simpler business, in my opinion. So for those that are looking for a great return on investment that's secure, that has far less headaches than owning real property, the note business is for you. Now, for those of you who are like, well, Lee, I still love the real estate, and I'm still willing to go out there and do the work, and I want the appreciation, I want the depreciation, I want the tax benefits. Cool. But can I encourage you to take your profits from your real estate and start getting some notes in your portfolio so that you have real estate and notes, income, debt? You're going to want both. Trust me. Okay. Another benefit of the note business, you can borrow money on your notes without giving up the note. In that sense, notes are just an asset, just like owning real estate. Did you know you can get debt leverage to buy notes? So for those of you that are going, well, Lee, I only got $25,000 in my self-directed IRA account. Did you know you could buy a $100,000 note with 25 grand by getting leverage to purchase the note? Now, if the leverage is going to cost you, let's call it 8% interest, and the note's paying 18% interest, you're making 10% on the levered money. That's pretty cool. So you can borrow on notes. And did you know that you can fix up a note and you can increase its value just as you can fix up real estate and increase its value? It's called rescheduling notes. Please write that down. Now, some additional benefits of the note business, and I'm going to go very quickly through these. No property management. You don't own the real estate. The exchange for real estate, a little known fact about note is that you can buy a note at a terrific discount and then trade the note at full face value for real estate. If you hold notes in your portfolio, you increase your net worth, which allows you to develop an unsecured line of credit from a bank to buy more notes. And they are easy to acquire. Notes can be easy to acquire, own, broker, and turn into a profit.